Good morning, everybody. Welcome to the game plan. My name is Gareth Soloway, Chief Market Strategist here at VerifiedInvesting.com. Thank you guys for joining me on a Friday. So just a heads up, this is the last day I'm on vacation, or we'll call it vacation, as again, I've still been doing everything I normally do, but just in a different location. Coming Monday, I'll be back in studio and rocking it with you guys there. So thanks for hanging with me while I was on break. Much appreciated. Okay. So markets this morning are seeing a little bit of selling. Now, listen, the markets have had one of the most tremendous bounces that we have seen in recent history. Vertical move to the upside. NVIDIA, for instance, gaining 35% on a 2-point change trillion-dollar company in just a week and a half since last Monday's lows. Incredible bounce. Markets should start to come in. I've been expecting this for the last day or so. Didn't happen yesterday. We got another rally up, but today it does look like it is starting. Now, part of that could be options expiration, right? And again, I want to go over this in just a minute, but first let's take a look at what the S&P futures are doing, or the S&P. All right, so I have economic news here already, but you can see the markets are trending lower pre-market. This isn't a big move yet, so I want to stress that. In the scheme of things, it's just a small pullback. We closed yesterday right here at 553. We're trading at around 550.75. So a little over a $2 drop in the SPY. That equates to about a $22 to $25 drop on the S&P 500. Housing starts and building permits did come out today. We came in at 1.24 million for housing starts. Expectations were for 1.34, so a weaker economic number there. And building permits, 1.4 million versus 1.43 expected. So both the housing numbers today were weaker than expected. But I just want to make this clear, right? You see in the media, the mainstream media out there, they're like, oh, mortgage rates dropped a little bit. This is great. I'm like, come on. Like, housing prices are still ridiculous. The economy's slowing. The consumer's hurting. I hate to say it, but dropping the 30-year yield by 30 basis points is not going to make a dent in what's going on for the average American out there. And I think everyone watching this agrees with that. It's going to have to be a much bigger drop either in home prices or interest rates to really get the housing market to start percolating again. So I think that's really the key here, is that these economic numbers that we're seeing today continue to show weakness in the housing market. I just read that the amount of new inventory being built is the lowest since 2009, basically. So again, the home builders know this is coming. I actually was just looking at the Toll Brothers chart. In fact, let's take a look at this. I wrote an article. It's on the homepage already. But I was looking at the Toll Brothers chart, and the Toll Brothers daily chart is a classic bear flag. Classic, right? So if we look at this, right? So here's your move up on Toll. Then we have this drop. And then look at this perfect little bearish flag pattern formation. And they report earnings next week. So I'm really curious about what we hear from them next week. But I've got to imagine, considering where the stock is trading. If we zoom out on this chart, guys, the stock, again, just from basically from 2023, look at this vertical move. And then this is, by the way, I'm on the weekly chart now. But then if we flip back to the daily, we have that beautiful bearish pattern going into the earnings next week. I think they're Tuesday after the close. Tuesday after the close, we'll get those numbers. Okay. All right. Just flipping back to the S&P 500 daily chart. So again, what we have here, and let me get rid of those economic numbers there. We had yesterday the S&P 500 surging up even above my zone of death or danger zone, and we actually gapped above it. Now, this is called what's called a river theory. And a river theory is a theory that I developed. It is not in any book. But I'm going to unveil it right now. Basically, what the river theory tells you, and it's everything that I develop is very much tangible. It's very easy to understand when you explain it in terms of an analogy. So let's say we come up to a big river, right? So there's this massive river. You're walking along, you got to get to the other side of the river. You come up and it's like the Amazon or the Mississippi. I mean, it's just a massive river. And you're like, okay, crap. So I got to swim across this. I'm going to be exhausted. I might drown. I might not get across. And so that's resistance, right? The river is resistance. Now, the next thought process is, okay, well, forget about this. I'm going to turn around and go back. So that's when you come up to a resistance like the danger zone. you get up to it and you're like, oh man, 3 trend lines converging here, just too much for me. And so you turn around. Well, the other alternative is to do what's called a river theory, or essentially you're like, oh, look, there's a bridge. I can just hop, skip, and jump over on the bridge, get across this river, and I've got plenty of energy to continue to run in that direction, right? And so that's the concept, and that's what we saw yesterday. If we see this, the market just gapped above this level here. It literally just gapped above it, and notice how it was able to continue to run up until it ran into the 786 Fibonacci. So again, when you gap above a major level that should be resistance, or gap below a major support, that again can often mean that in the short term you continue on that way because you didn't use the energy to push through that resistance, to swim across that big river. And therefore, again, explains why yesterday we were able to push up. But lo and behold, what did we do? We went right into the 786 Fibonacci, and now we're seeing a little bit of a pullback. And just going back to the intraday, you're getting a little bounce off the lows here, but nonetheless, nice little fade this morning going into the open. Markets open in about 24 minutes. All right. Looking at the NASDAQ 100, same thing. Nice little rollover here. Early in the morning, we did see NVIDIA green on the day, but it has turned red since. That's really when the market started to come down a little bit harder. A little bit of a bounce right here. Again, if you're a member of Smart Money stocks and ETFs, you know the last day or so, I've been accumulating SOX, which is 3 times short the semis. We've been accumulating QID, SDS, which is both short the NASDAQ and the S&P, and also volatility. Volatility, I'm a big fan of down here, guys. Very unusual for us to see volatility. In fact, I published this to members yesterday, or I actually posted it on the free blog, actually, this one. This is a trend line of the VIX, and look at how we just kept hitting this line, and then look, overnight into today, we broke above it. So this is now a breakout on the VIX, and the VIX actually should start to make a retrace. You can see if we here, looking at it right here, you can see it's all jumbled when I go to the daily chart. But the concept here is that really what we should see is at least a 236 Fibonacci retrace. If we take the high to the low, you should at least be headed back to about, I would guess on the VIX, back to about 27. And even then, we're still down from 65, right? I mean, that's a very minor move. But what's cool about that is that that's actually like a 50% move on the VIX from current levels, this 15-ish level. And so, again, there is some upside here. And basically, think about it like this, is that if you have a pendulum, right? And I'm big on these analogies because for me, it always helps me understand things. So I'm assuming everyone else is the same way, even though you may not be. But basically what we have here is you have a pendulum, right? And the pendulum swings one way dramatically. So this was to the upside, then it swings the other way. And then once it does that full kind of round trip, there's this pendulum where you essentially see it swing back partially, but less, right? So it goes like less, and then it goes less, and it slowly finds its kind of zone, right? So it just, think about it swing back and forth, but each time it's losing a little bit of energy. And so here you had this big swing up, big swing down. Now we should see a little smaller swing back to the upside, maybe back to 27 or so, give or take. Now, eventually, do I think things are going to freak the market out enough to cause another major spike in the VIX? Yes, but you just don't know when that's going to be, right? We don't know if the dollar yen is going to cause an issue, Japanese Nikkei. What's going to be the next catalyst? Is it going to be something out of Russia, Ukraine? Is it going to be Middle East? You just don't know at this point, and that's, up for us to just kind of look at the charts and see. All right. I'm going to NVIDIA here, guys. NVIDIA, again, beautiful move up the last few days. Again, astounding, in fact, for a company of this magnitude to make these type of moves. If we do a measurement, take a look, 35% move from low to high. But again, here we have a gap fill, extended move. It makes sense that price might stall here and pull back. And if we flip to the intraday, you can see, again, we've had a nice little bounce here pre-market after the initial drop. But look at that nice sharp drop from 123.5 down to 120.5, a $3 drop. And then this is kind of like the pendulum, right? So you have a big drop, big bounce. Maybe the bounce comes back up here. Then we should get another down move here. And we'll just kind of watch to see where that ends today. But needless to say, when you look at a chart like this, after this huge bounce, you should see some sort of pullback over the coming days. And I would expect that a pullback in NVIDIA continues, probably relatively shallow. I could see us maybe coming back down. Maximum would be back to about 109, which is from current levels about $11, $12 downside. But again, keep in mind that end of month they have earnings. So we have the earnings. And so I doubt it really sells off that much ahead of earnings. Maybe just a standard retrace, maybe back to 109. And then it stalls out until we get those earnings news numbers. And then once that happens, you'll get another major move. The pendulum will either surge to the upside or surge to the downside and begin to kind of mitigate and get slower and slower as it chops around. Speaking of chopping around, SMCI, incredible bounce here, guys. Doesn't look like a lot on the chart because the chart is such a wacky chart of massive proportions, but incredible to think that this stock was trading at 480 basically a week ago. And then here we are north of $630 basically as of yesterday. Incredible move. Now, there is a gap fill coming up at 673, and then this trend line retrace right back here. So somewhere around 673, 675. If it does achieve that, that would be a level to potentially short it in the near term here. Looking at AMAT, Applied Materials, reported earnings yesterday after the bell. The stock, again, was all over the map. We were kind of watching it in trading the close. But ultimately, when all was said and done, it has come down here. They did raise revenue guidance and earnings guidance, but it was only a small raise. And I think this goes to show us that companies in this sector, especially after the recent bounce, and you can see this trend line here. Let me flip over here. Look at this trend line. So look at the size of the bounce. The stock Applied Materials went from 172 to yesterday going into earnings 213. Think about that, 172 to 213 going into earnings. Incredible. So essentially what this tells us is that a company that has rallied this much in this sector has to do more than just come out with a slight raise in guidance, right? They had to come out with a bigger raise in guidance to justify and push the stock higher. So they are pulling back. Now, it's not a big pullback because, I mean, honestly, earnings were pretty good. But again, just a little bit of a pullback today. And that's one of the reasons why you could get a little weakness or profit taking in the semiconductor sector as well. All right. I'm going to flip right into Bitcoin here. Bitcoin is holding steady, still below this key level here of around 61,000 on a confirmation basis. It still favors downside to support around 53,700. So now the one thing that would change my view, if it could close above this line at 61 and confirm, then it opens the door to go up to about 68, 69, maybe 70. But right now, again, still weak positioning. And I did bring this up, I think, yesterday, which is, if you look at the S&P 500, let's flip back to the SPY chart. Look at this vertical move, right? Incredibly vertical move on the spiders, the S&P. All right, then you go to Bitcoin and you're like, wait a minute, what the heck? Yeah, it had a bounce. It was a big bounce, but it hasn't continued up. In fact, it's been going down. And so just something to kind of keep an eye on here is it sometimes seems like Bitcoin fits into the risk on category. And then other times it seems like, oh, wait, it's not risk on because it's not performing with the S&P and the NASDAQ or NVIDIA, as a matter of fact, right? And so it's just kind of still trying to figure itself out, which is okay. But as a trader, as an investor, this is where charts are so important. If you follow the charts, you don't have to be like, oh, well, why isn't it doing that? It's just like, well, the chart told us it never confirmed above this line. So it was still in weak form. And sure enough, it's come back in. And that's where the charts really are helpful to understanding. All right, let's look at gold real quick here. Gold is pushing up. We might touch 2,500 today, guys. Wouldn't that be something? What a move up on gold here. Trading at $24.86, $14 away currently from that 2,500 level. Notice the 25 even number is also the upper end of the channel here. So for me, I have a position long GLD as a swing trade in the service smart money commodities. I'll probably be selling into the 2,500 because it's a swing trade, which means we're in and we're out. But then once it pulls back, I would expect to pull back off that upper channel line. Then I'll start to reaccumulate. It might go a little higher than 2,500. I don't know. But I do think, again, you'll get a decent amount of hype, which usually marks a short-term top once it pierces that even number. Once it pulls back probably to the midline, start to accumulate again, low end here, accumulate again. All right, on silver's front, let's take a look at silver. Silver is pausing today. So again, notice yesterday silver was stronger than gold. Why? Because economic news was very strong. Now today, gold is stronger than silver. Economic news, the building permits, housing starts were a little weaker. Markets are taking a breather. And so silver is stalling out. But on a positive note for silver bugs here, we did close above this line. It is unconfirmed. So don't, it's not a true breakout yet. It's still unconfirmed, But the fact that it's just holding steady, if it can just hold steady here, maybe it has a shot to confirm, which would then open up for a move up to about 31 and change this down sloping trend line. So at least it's a positive step for silver here. Now it just needs to get its mojo and confirm, then it should be on its way. Let's look at oil real quick here, guys. If we flip over to oil, oil again, a little bit of a pullback the last few days until today, small bounce. I did add this new trend line in here. This is just a shorter term trend line, pivot high to pivot high here, here, and here. And again, that just gives us a basis for understanding why price is stalling here. If it can get above, then it goes to this upper trend line here. As long as it stays below, it could easily fall back to that 72.50 level of technical support. And then natural gas is always a fun one, guys. Again, natural gas. I still remember we unloaded, I believe it was on Monday, we unloaded the long position on UNG and smart money commodities. And it was a nice exit. And to be honest, it's lower now than it was, not by much, but it just shows you. I mean, yeah, you could have stayed in and you would have just been chopped sideways the whole entire week versus just taking the profits and being done with it. It's why the charts to me are so key, is they really help me just make logical decisions that are based on probability, right? And again, you can always second guess yourself, and half the time, I could have done a little bit better, but it's the consistency of just doing it over and over again that gives you that edge and confidence, frankly, where you don't, you're not relying on emotion to make decisions. All right, couple other charts I just wanted to go over. Let's go over Ethereum real quick here. So Ethereum here, guys, does have a little bit of resistance right up here at 2,800 and change. So notice it again, it's stalled out here. If it can push through there, it has additional resistance at 3,000. So there's a lot of resistance here on Ethereum. It is up slightly on the day. The one thing just to kind of note here on the Ethereum chart, if we zoom out on this, right? So you have a couple things to take note of. So there's a huge level down here around 2,000, and this would be a level where it's not just one trend line. There's multiple trend lines, right? So you have a level right here we can draw on that kind of converges there as well. And even, to be honest, even you have kind of like a downsloping trend line here as well that kind of cuts right through this area. So if price were to get below 2,000, that would be a huge buy area for me on Ethereum. But right now, again, I still think there's a small chance it could still push up and test 3,000, but it needs the stock market to behave itself and continue to stay strong. If the stock market weakens, altcoins specifically do a lot worse overall. Looking at copper real quick, let's take a look at copper. Copper, again, this was an absolute amazing zone here. Look at the trend lines down here, guys. So you have this low to this low, and it came right here, this flat top right there, and that was where that support level was I talked about. We have had a good bounce off of it, but we are approaching a lot of resistance. And what a drop on copper, guys. Again, you could even put in this trend line too. This is another trend line that should be also respected. Look at that. So there's massive resistance around 423, 425 on copper. Now, the question is, what I would say is, well, which way does it break? Because it's going to get sandwiched between these two levels. And does it break to the upside or does it break to the downside? Now, not the chart wise, we don't have a good read on that, right? So you got to just be honest with yourself. The chart is telling you have some resistance just above, support below. We don't know which way it's going to break. However, if you rely on the macro data and the general prognosis for the economy, it would imply that eventually we break lower. And I will say this, like you look at some of these charts like nickel, even nickel's barely bounced here. This has been a surprise to me. But I mean, look at the drop on nickel, incredible drop. And then it kind of making like a little bullish pattern here, but it hasn't been able to break out and it's getting long in the tooth here. And so on the nickel chart, it is kind of interesting to see that you're not getting that move up, even with the good economic news this week, that you would have said, oh, well, that's good for the industrial side of metals. Nickel should do well. And it really hasn't done much over the scheme of this last week here, over this last week run. So just little interesting things like that. Lastly, I just want to touch on one other chart. I was looking at Apple, guys, AAPL, into a lot of resistance up here. So just keep that in mind. I would expect a pullback on Apple, incredible bounce, but look right into that pivot top. You can actually extend that line out right here, and you can see the low here, this sideways chop right in here, and right through this zone. All right, so again, just a couple things there. Now, a couple things to be aware of, guys. Next week is Jackson Hole, so the Federal Reserve Chairman will make a speech from Jackson Hole. That's going to be the big mover next week. There will be some other economic news, but for the most part, Jerome Powell is going to guide us to, do we expect one rate cut in September? Two, how many for the rest of the year? That is going to be the market moving event. Everyone's going to be talking about it in the media, Jackson Hole next week. All right, guys. As I said, next week I'll be back in studio. I'm excited to be back and be in the studio, being able to move around instead of just sitting here in front of a green screen, essentially. But listen, always good to get away, recharge the battery a little, even if it was a crazy last 2 weeks. Seems like every time I go on vacation, there's always something crazy happening. But again, I'm here for you guys. Verified investing is always here for you guys, and we will always deliver what the charts and the probabilities are telling us. Right? That is what it is. I'm not going to listen to the BS in mainstream media. I'm not going to listen to the BS on social media. The charts are where we get our probabilities from. They don't lie. Lots of other people will lie. In fact, most people will talk their narrative up. The charts don't. They have no agenda, and that's the beauty of it. Have a great rest of your day, guys. Have a great weekend. I'll talk to you soon. Take care.